Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. This is the type of episode that I love putting together with Rob, because we don't just give you the data, we give you the reasoning behind the data and then empower you to make better property decisions. This week, we help you understand why property prices are going up right now.
Welcome to the Property Podcast. Thank you for joining us. Rob and I advise a multi-million pound property fund, and our company does over £100 million worth of property deals every year. And that means we spend a lot of time thinking about property and a lot of time thinking about house prices. We are going to try and solve the paradox today of why house prices are meant to be falling, but they very much are not. And most importantly, answer the question of, well, what should you do when it comes to executing your own property strategy in this environment? And make sure you stick around to the end, because in Hub Extra, Rob shares my favourite resource of the year so far. Let's get into our news story for this week. And Rob, a good news story this week.
A very good news story. So currently, the UK is in a recession. People say, technically, because we don't feel like we're in a recession, most of us anyway. But the third and fourth quarter last year saw a drop in GDP in the UK, so therefore we are in a recession. It wasn't a big drop, it was very small, but it was still a drop nevertheless. So how have we started this year? Well, I've got good news for you people. You may have missed because it didn't make many headlines, but in January, GDP rose by 0.2%, which doesn't sound a lot, but it didn't fall by a lot in the final two quarters of last year. So hopefully we are on our way out. We did say that when it was announced that we went into recession. We didn't feel it's going to last long, and the numbers from January are positive. What makes it extra interesting is it was led by growth in the construction industry. So at the end of last year, the construction industry was in negative territory, but in January alone, it's grown by 1.1%. And that was the main driver behind the overall growth of 0.2%. So not only is the economy doing better, but the construction industry as a whole is doing better, which, of course, if you're keeping an eye on property, is very interesting indeed. Now, 1 month doesn't make a year, but these are the green shoots that we're seeing across the board that we've been reporting on, and that general positivity means that so far, 2024 has been a good, solid year. We're not talking about crazy booms here, people. We're just talking about good, solid data that gives us peace of mind. And the more of that, the better.
How would you like to see all the details and all the numbers behind investments that we've made personally over the last couple of years? Well, that's what you can do if you join a webinar that we're holding on the 4th of April. And if you didn't know about it, that's because you're not subscribed to our free weekly newsletter, Property Pulse. So you can put that right by going to propertyhub.net/pulse. But last time, after we mentioned it on the newsletter, we had hundreds of people register, so many that we thought, well, we can't put this out on the podcast as well, or the whole software will crash. But as it was so popular, we're running it again and letting you know first this time. So if you come along, what you'll see is a complete breakdown of our investment strategy, and then we'll show you some of the deals that we've done with that strategy in mind. And by the end of that, you might go, well, this looks great. I want some of this. I'm interested in working with Property Hub Invest. Or you might not, but you'll have learned how we go from goal to strategy to deal, and you can use the same process to find investments for yourself. So that is on Thursday, the 4th of April. It's completely free, of course. So to claim your spot, just go to propertyhub.net/webinar, and you'll find the link in the show notes as well. What on earth is going on with house prices? We talked about predictions back at the start of the year. We listed out every expert prediction that we could find. And with very few exceptions, house prices were meant to be down in 2024. Not by loads, maybe by 3 to 5%, but you would struggle to find anyone talking about house prices ending the year in positive territory. And yet, nobody seems to have told house prices this. If you look at the nationwide index and the latest data we have, house prices were up in January, up in February, up 1.2% over the last 12 months. If you look at the Halifax index, house prices have been rising for 5 consecutive months. And not only does this go against all the expert predictions, this shouldn't be happening. When interest rates go up as quickly and by as much as they have done over the last couple of years, an almost historically unprecedented increase in interest rate, house prices are not meant to go up, they're meant to collapse. So in this episode, we're going to try and figure out, Rob, what is going on, why is it happening, and what does that mean for what's going to come next?
All right, well, let's zoom out. Let's have a look at what's happening globally, because this actually helps us with the UK. All right, so according to the OECD, and I'm sure you all know that that's the Organisation for Economic Cooperation and Development. I mean, who didn't know that? I haven't just Googled it. They have reported that real house prices across the 37 countries that are in that organisation have returned to growth in the third quarter of last year. And actually, house prices grew by 2.1% across the board. So it's not just the UK that is doing better than expected. And actually, in the third quarter of last year, the UK wasn't doing that well. It's improved since then. So it's lagged behind other countries. And we're seeing this unexpected resilience in, yes, the UK market, but also US and Australia. Lots of people have been surprised globally that this is happening. House prices have held up best in the US, where house prices up to November last year were up by 5.2%. So we're getting excited by a few percent, but in America, it's pushing on even harder. So this is not a UK phenomenon. This is a global phenomenon. And that actually helps us partly understand why this is happening, but we'll come to that a little later. Now, it's important to say that it's not happening everywhere. China, pretty big country, probably familiar with it. They've seen house prices down, and they're expected to continue to fall. They did have a long boom. It's no surprise that that is happening, but it's also worth mentioning it's not every country across the world. It's just a lot of them that are seeing house prices go positive. So Rob, even though globally there were green shoots and it was looking positive, the UK market was a few months behind, as we said, and it started well, but that's not what we were told that was going to happen. And I think we should rewind slightly, and only slightly because we're only a few months into the year, and remind ourselves of what the experts said would happen to UK property prices this year.
Yeah, so I think the consensus view was probably like down 3 or 4%. I haven't gone in and averaged them all out, but that was the message that we were receiving back in December, January. That was kind of the story of 2023. House prices coming down a little bit, a negative market, the number of transactions down a lot as well, as people were just like waiting it out to see what happened. And everyone seemed to believe that that pattern was going to continue. But a lot can change in a few months, and we're starting to see changes in language from some of the commentators around this. If you look at the comments that come out with the actual house price indices each month, there is still a lot of caution, lots of talk about the near-term outlook being highly uncertain and confidence being fragile, and that is all true. But there's been a few quotes acknowledging that maybe house prices in the UK and globally are not going to fall much further, or indeed any further. So an analyst at the investment company T. Rowe Price said that house prices are close to the bottom in many places and recovering in a lot of places. And the senior economist at Capital Economics said the most recent data suggests that house price falls have now bottomed out in most countries. I think we've had the house price correction that we're going to get. So staying zoomed out, Rob, thinking about the UK, but thinking about the rest of the world as well, because we're seeing a similar pattern in so many places. The obvious question is, why has it not been worse? I alluded to this earlier, but you'd expect that if you see interest rates, the rate you're paying on your mortgage, go up from like somewhere around 2% to somewhere closer to 6%, you would assume that house prices would, if not collapse, then fall quite substantially. But that hasn't happened. So we need to answer, why hasn't that happened? Because that could give us a clue as to whether it's hasn't happened yet, or isn't going to happen, and actually we're going to have a boom. And there's some of the scenarios that we need to get into later in this episode.
Well, as you'd expect, there isn't just one simple reason for this. And it's a collection of things that normally move any asset price, including property. And I'll start off with one that I found interesting because, Rob, this has baffled me a little bit. And the main reason I predicted property prices will go up this year, we'll come on to. But when we had Property Hub Select a few weeks ago, we did a bit of Q&A, and we were started on mortgages, but it went a bit more wide-ranging, and we talked about the global economy. And I got into an interesting discussion with one of the Select members there, and unfortunately, I didn't get to speak to the gentleman afterwards and get his name. So if you're listening, hopefully I'll see you at another Select launch very soon, or reach out to the team. It'd be great to have another chat. But one of the interesting points he made is that the QE that we unleashed during COVID hadn't gone away. So we increased interest rates, but it was still there in the background. And now interest rates have settled which they have pretty much globally, that final barrage of QE, and we have to remember the amount was unprecedented, but that final amount has helped lift asset prices across the globe. We have to remember it's not just property that has seen positive growth in the early parts of 2024. There are many different asset classes that are in positive territory at the moment. So that does make sense to me. And it wasn't really something that I'd contemplated before or thought about before. And I thought it was a really interesting point. So I wanted to start with that. But I will come to the reason why I made my prediction for positive growth. But I absolutely do believe that that could be part of it. So I think we should start with that. Rob, simple supply and demand also has an impact here. Again, it's not the only thing that influences property prices. And some will argue that it doesn't influence them much at all. But whether it's a lot or a little, there is a difference made by a shortage of properties. And there certainly is a shortage in many countries across the globe, including the UK.
Yes, definitely. And that was mentioned in an article in the FT that we looked at when putting this episode together. It mentions both migration and restrictive planning permission as putting upward pressure on house prices in not just the UK, but Canada and Australia as well. Because, of course, that's more people needing housing and remaining hard for that housing to be built. But there's another factor as well, which we've talked about a couple of times on the podcast before, which is that in real terms, after inflation, there's been more of a decline than you might think. So the simple way of thinking about this is that if property prices stand still, your £200,000 house is still a £200,000 house 3 years later. You go, oh, property prices are unexpectedly resilient. They haven't gone anywhere. But if the price of everything else has gone up by 20%, which it kind of has, then you say, well, it isn't. If you're anchoring to the price in pounds, but everything else, except housing, has got more expensive by 20%, therefore, house prices in effect have fallen by that much. Now, that's just an example. I don't think it is 20%. I think it's more like 15, something like that in real terms. Can't quite remember. But the point is, you'd expect house prices to have fallen, and they actually have by quite a bit, but they've fallen in real terms, not so much in nominal terms. And house prices in real terms in the UK are in fact at the lowest they've been for a decade. So it's not like this global increase in interest rates hasn't had an effect. It has. So for more on that, go and look up our episode on the silent property crash, or go to YouTube and search for Property Hub Silent Property Crash, and you'll find the full argument and all the data backing that up there. And Rob, I think there's one more factor worth discussing, which is expectations. So the housing market can freeze for a bit. There's a period of time where everyone can stay put and avoid making a decision, waiting to see what happens next. That can only go on for so long because real life needs to continue. But now expectations around interest rates seem to be improving. That's getting the market going with confidence again. So even though things haven't really improved that much in reality yet, the belief seems to be that they will, and that could be making a difference.
And belief is so important when it comes to property prices and any asset class, actually. It's a really interesting thing. But in the economy, if the masses believe that something is going to happen, then it becomes often a self-fulfilling prophecy. If everyone believes a certain asset class is going to go up, then it tends to go up because people act and behave like it's going to go up even before it has gone up. I talked about Bitcoin when we did our property predictions at the beginning of the year, and I said over the Christmas period, people were talking to me, unprompted. I wasn't asking people what you think about Bitcoin, but they know I'm interested in investment, so that's why they would engage on that subject. And people were coming to me and saying that they are now investing in Bitcoin again, and they believe it's going to go up in 2024. It was enough people for me then to come on and predict on the podcast that Bitcoin would have a strong year in 2024. And on the date of recording, it's been exceptionally strong. And that is a great example of a self-fulfilling prophecy. If everyone believes a certain asset is going to go up in price, their behaviour changes, and then the asset ultimately does end up in price. And that is what I feel is happening with property as well. And that is the main reason why I predicted property prices would increase this year. Not as bold as your good self, Mr. Diggs. I did not go as big as you in your predictions on property prices, but I did believe, because of sentiment and how powerful sentiment is when it comes to the economy, was going to drive property prices up a little bit further. And this is also reflected in the Consumer Confidence Index, not just people I speak to. And at the moment, it's at minus 21, which sounds really bad, but actually it was minus 36 this time last year. And the long-term average is minus 10. So we're obviously a bit negative when it comes to confidence. The all-time high, interestingly, is 10, just 10. So it gives you an idea. And that's been recorded now for decades. So it's an interesting number to follow, but it is improving at the moment. So let's see what happens. But that is concrete data showing that compared to a year ago, as consumers in the UK, we are more confident now. And that is improving. So that's an interesting one to watch. However, with all that said, that's a belief on property prices going up. Rob's also alluded to, people believe borrowing costs will decrease later this year. What if it doesn't happen, Rob? What if interest rates aren't cut? Then the belief is shattered, and then that could help soften property prices, or could it even cause a crash if it plays out?
It's possible. For me, there's still the chance of a crash, or at least the chance of prices continuing to slide in at least real terms. It's what economists would call a tail risk. It's not your central scenario. It's not what you believe is most likely to happen, but you're acknowledging the possibility. What is that chance? Is it 1%, 5%, 10%? I don't know. It's very hard to put a number on it, but you need to acknowledge that it's there so you can start looking for the signs of it and not be surprised all of a sudden if it does happen. Because as you've alluded to, Rob, confidence and beliefs are really important, and confidence at the moment for the last couple of years seems to have been particularly fragile. I can't remember a time when month to month things can swing so much based on one number coming out and everyone suddenly feeling completely different about things. And given that this belief is baked in that central banks are going to cut interest rates, if they don't, then we could find sentiment changing quite quickly as people were banking on their mortgage getting cheaper. And in fact, that doesn't happen. And perhaps more importantly than that, what that lack of rate cuts is signalling more broadly. And I think a similar but separate point, we could still end up with what I'd call a proper recession. But it's entirely possible, coming up to your earlier point, that that final wave of QE has washed through now. And once that tide goes out, we will see the true weakness of the economy. And there will be an actual recession with job losses. And of course, that will have a knock-on impact on the economy. There may also still be effects from higher interest rates still to come, perhaps because it's been obscured by QE, perhaps just because these things take a while to kick in. We've seen a few things breaking as a result of interest rates going up so fast. We saw the bank failures in the US. We saw the pension fiasco in the UK. But you kind of would have expected there to be more. And there may still be more to come. And if there is a crack forming somewhere, then when we find out about it, that could change everything as well. So I think, Rob, when we're addressing this question of what's happening with house prices, we're talking about the economy a lot. But that's because, for me, most of the factors are not specifically housing related. It is related to the wider overall economy of which housing is just a part. And because those factors exist, we therefore have to acknowledge that there is a chance that this is just the calm before the storm and there will be a crash to come. But it's also possible, Rob, that this is just the calm before the boom. I've just laid out some factors that could lead to economic meltdown and a crash, but there are also factors that you could see line up and lead to a melt up and another property boom.
Absolutely. And while some of the stuff that Rob's said sounds scary, I think we have to remember that currently we're seeing modest growth. And that's what it is. It's not a boom. And it feels a long way from a boom, and it also feels a long way from a crash. And normally, to have a big crash, you need a big boom. And as Rob said, in real terms, property prices, because of the silent property crash, are actually at a decade low. So what comes next? Well, we're definitely not in a winner's curse, that's for sure. Which, if you follow the 18-year property cycle, is the last few years before a crash. Because the winner's curse is a time where mania is happening, where people are buying assets and speculating that it's going to go up very quickly in the short term. We're nowhere near that. It's far from boom territory. Again, we're seeing modest growth. The reason why modest growth is a news story and we're covering it is because people didn't predict this modest growth. They actually predicted meaningful falls, which in real terms would have been major falls. So it very much feels like a normal time to keep buying. But Rob, you rightly say it's not just a property thing, it's a global economy thing. And if we look at another asset class, Ray Dalio, somebody we have referenced on the show many times. His work is absolutely brilliant. Follow his stuff on YouTube and his stuff on Cycles. It's really, really interesting. But he's recently put out some analysis on the stock market, particularly focusing on the Magnificent Seven, which is 7 tech-related stocks. And he feels that we're not in a boom with stocks as well. And again, stocks aren't the economy, but like property, they are a big part of the global economy. So that's two major asset classes that are looking positive, but aren't booming. So a boom will normally come before a crash. And a boom may happen. Don't think it's going to happen in the short term. It may happen. But I also don't think a crash is on the horizon either. It feels, Rob, just like a normal time with a lot of noise. And in normal times, you should just keep buying normally.
Yeah, I think that's a nice way of putting it. And the point about the winner's curse is an important one, because I've seen a couple of comments recently and received a couple of messages recently saying like, oh, well, we must be in the winner's curse right now because Fred Harrison says that the cycle will end in 2026 and blah, 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 and house prices are going up. The winner's curse phase, when it comes to the framework of the property cycle, isn't about a particular number of years. It's about behavior. And it comes back to this point that's really run throughout the episode, which is sentiment. The winner's curse is when everyone's going nuts. And normally that happens for a couple of years at the end of a cycle, but it's not about the timing. It's about the behavior. People buying speculatively, mania, people buying nothing to do with fundamentals, nothing to do with because they want somewhere to live, but buying just because they think house prices are going to be higher next month than this month. We're so far from that. The market is nothing like that at the moment. The market is less negative than it was, but it's still a million miles away. Things can change quickly, for sure. We may come into that kind of world. But I think it's really important to do what you've been doing in this episode, Rob, which is actually like look at the world around you, not get wedded to some kind of like academic idea of what should be happening, but look at what really is happening. And at the moment, there are no signs of speculative mania whatsoever. And it's possible that that will come. It's possible that something terrible will happen and prices will all of a sudden collapse from here. But for me, the conclusion from this episode is, yes, on one level, you would have expected, as a result of what's happened over the last few years, house prices to come down more. But when you look at it, you can say, well, first, one, house prices have come down by more than you think. And two, you can see good reasons why they haven't come down further. So given that, clearly we are not in an unsustainable boom. And there's a possibility of things going wrong. But there's always a possibility of things going wrong. You can't wait to invest until a time when everything looks like it's going to be absolutely perfect forever, because that never happens. What can you do other than continue executing your plan? There's really not much of an alternative. So that's what I'm going to be doing, Rob. Until you can see something solid in the world around us that tells us to do otherwise, I'm just going to keep on sticking to the plan. And that sounds like you're going to be doing the same.
And the beautiful thing about property investment is, even if we're completely wrong, over the long term, you'll be looked after. But you know what, Rob? Episodes like this are my favourite type of episode because people don't often have the time or maybe the interest to deep dive as much as we have today. And by looking at this stuff, it keeps you ahead. Most people will not have got into the level of detail that you've just listened to today. And you, as a property investor, are now ahead of the curve. You can invest with reasonable confidence now. You shouldn't be expecting a massive boom in the next few months, nor should you expect a massive crash. Of course, both events could happen. But based on all the information that we have and everything that we've gone through today, you probably can just invest with confidence and know over the long term, you'll be absolutely fine. So, Rob, we are very motivated to keep delivering this type of information to our podcast listeners. And you know what? We are so happy that so many have shaken hands with us over the last few weeks.
Yeah, why are they shaking hands with us? Because they've held up their side of the deal. You might not be aware that you have a side of the deal to hold up when it comes to this show, but you do. You will listen to podcasts where the deal is they give you an episode and you listen to a few minutes of adverts in return. That's not the deal that we have on the show. We have a different one. The deal is we give you an episode and you recommend the podcast to others. We're not around to check that you're doing it. That's why it's a handshake deal, but we can see from the numbers that many of you are doing it. So thank you so much. The way to do it is either to go over to YouTube, search for Property Hub, and then hit subscribe on our channel where we bring you a new video every week, or just pass this podcast on to someone else. Maybe even this episode. If you've had a conversation like this with someone recently, with a friend, where you've been debating what's happening with house prices, why it's this way, what's going to happen in the future, send them this episode. They'll probably enjoy it. And once you've done that, you can reach out and shake our hand, confident that you have held up your side of the deal. And just to reward you an extra little bit for doing that, we have Hub Extra, the part of the show where we give you a little bit more. We step away from property, but give you something else that's going to make your life a bit better. And Rob, I've seen what you've written down for this week's Hub Extra. I already love it. Go on. Time to reveal all.
Okay, so this week I'm going to recommend, because I have done this, is getting yourself a coach on Fiverr.com. 2 R's at the end. Fiverr.com is a bit misleading because most things don't cost a fiver, but it's a marketplace where people sell stuff. And on that marketplace, you can get yourself a coach. So I play a lot of chess, and I'm at a reasonable level, a level that I'm quite happy with. However, I've plateaued a bit with my rating. So not being the type of person just to accept that, I've gone and got myself a coach on Fiverr to help me with my chess game. And the value I extracted from that coaching was exceptional. The coaching is not expensive, and you can do it from the comfort of your own home. Now, you might be listening and going, Rob, that's great, but I don't play chess. Well, first of all, you should, because it's a great game. It's a wonderful game, and I'm sure you would enjoy it. However, if I can't convince you to pick up chess, I'm sure there are areas of your life where you would like coaching, and you can search for all different types of coaches on Fiverr. So have you always wanted to learn a language, but you've struggled? Maybe the apps aren't working for you. You can get a coach. Somebody who will guide you through the language that you're trying to learn and help you in whatever area you're looking at, and they can bespoke it to you. Think of a type of coach, and it exists. You can have voice coaches, life coaches, business coaches, Amazon seller coaches, Google Ads coaches, career advice coaches. You think of it, it's probably there. And most of the sessions I see seem to vary between 15 to say £40, which actually, for an hour's coaching, which most of them deliver, is exceptional value. The great thing is they're all rated, and you can read those reviews before you engage with them. So you're not taking a punt. You will be able to assess them before you engage with them. And you don't have to commit long term. It's just, let's say, £20 to see if it's worthwhile or not. And if it's good, you can use another one. Me personally, I plan on using a few before I maybe work with one more regularly. But that's absolutely fine and almost expected on Fiverr. So do take advantage of it. I think it's a massively underused resource. And I know people who listen to this podcast, Rob, are avid learners, because why else would you listen to it? I know our dad jokes are okay, but actually it's because people want to learn and better themselves. So I think this is the perfect resource for our audience.
I completely agree. I do need to say that you are downplaying your chess ability slightly. I need to say that just in case you try to sucker anyone into playing you and hustle them for some money at some point. But apart from that, I will also say that I love this tip. I'd not thought to look on Fiverr for a coach. I think that's a brilliant idea. I've just done a quick search on there, and like you said, the breadth of things you can find is incredible. And coaching is so good, not just for the knowledge, but also for the accountability. It's a way of committing to improving at something and taking something from that'd be nice, and actually making big strides on it. So I think if you spend like 5 minutes, make a list of 10 things that you'd like to be coached on, and they could be really tiny, really trivial, like how to keep houseplants alive and not kill them all the time like I do. Whatever it is, make a list of 10 things, then go and look on Fiverr, see if you can find a coach for them. And I think you'll be surprised by the scope and by how low the price is as well. But you will not be surprised to hear that we're going to be back with the Property Podcast again next week. Of course we are. Every Thursday and every Tuesday with Ask Rob and Rob. And in the Sunday Times on a Sunday. And we'll have a new YouTube video for you on Monday as well. Almost every day of the week, there is new property goodness coming your way. So I hope you're here for it next week and every week. Until then, have fun, and we will see you soon. Bye-bye.
Bye-bye.